Here's a summary of AstraZeneca's 2025 Q3 earnings call, designed for clear, concise delivery. Introduction. Welcome to AstraZeneca's 9 months and Q3 2025 investor and analyst webinar. Please note that forward-looking statements made today involve risks and uncertainties. All materials are available on our investor relations website. We'll be discussing performance using constant exchange rates, CR, and core financial numbers, with a reconciliation to GAAP provided. All figures are in millions of US dollars unless stated otherwise. CEO remarks. Pascal Soriot. Pascal Soriot opened by highlighting AstraZeneca's continued strong growth momentum and pipeline delivery through the first 9 months of 2025. Financial highlights. Total revenue grew by 11% and core earnings per share, EPS, increased by 15%, driven by demand for innovative medicines. Pipeline progress. The company achieved 31 regulatory approvals and saw 16 positive Phase 3 trial readouts, with 6 data sets presented at major conferences, demonstrating the significance of their research to the medical community. Therapy area growth. Oncology, biopharmaceuticals, and rare disease franchises all saw robust growth of 16%, 8%, and 6% respectively. This growth successfully offset the loss of exclusivity for some mature brands. Geographic strength. Strong growth was observed across key geographies, with the U.S. up 11% and emerging markets, outside China, up 21%. Catalyst period. AstraZeneca is in a catalyst-rich period that is expected to continue well beyond 2026. Key Phase 3 readouts. Significant positive Phase 3 readouts included DESTINY-Breast05 and DESTINY-Breast11 for Enhertu in early HER2-positive breast cancer, TROPION-Breast02 for Datroway in triple-negative breast cancer, Bax24 for Baxdrostat in treatment-resistant hypertension, and Tulip Subcu for Saphnelo in SLE. These results reinforce confidence in their $80 billion 2030 ambition. U.S. market developments. A landmark agreement with the U.S. government provides pricing clarity and a 3-year exemption from tariffs, aiming to lower costs for patients while safeguarding innovation. The company is working towards price equalization across wealthier markets. Manufacturing and listing. AstraZeneca is expanding its global manufacturing capacity, including a new facility in Virginia. Ordinary shares will be listed on the New York Stock Exchange from February next year, offering greater access to capital. CFO remarks. Aradhana Saran provided a detailed financial overview and outlook. Revenue growth. Total revenue increased by 11% year-to-date, with product sales up 9% and alliance revenue up 41%, driven by Enhertu and Tezspire. Core gross margin. The core gross margin for the first 9 months was 83%. A slight decrease is anticipated for the full year compared to 2024 due to the Medicare Part D reform, Brilinta's loss of exclusivity, LOE, Soliris biosimilars, and increased profit sharing. R&D expenses. R&D expenses rose 16% year-to-date, reflecting high clinical trial activity and investments in pipeline opportunities, like IO bispecifics, weight management, and cell therapy. R&D as a percentage of total revenue was 23.3% and is expected to remain at the upper end of the low 20s for the full year. Core operating margin. The company achieved a core operating margin of 33.3% year-to-date, remaining on track for their 2026 margin goal. Operating leverage is a focus, with product revenue growing at 11% and SG&A at 3%. Core EPS. Core EPS was $7.04, representing 15% growth at CR. Cash flow and CAPEX. Strong cash flow from operating activities increased by 37% year-to-date to $12.2 billion. Capital expenditure, CAPEX, was $2.1 billion year-to-date and is expected to increase by around 50% for the full year, with a step-up in Q4. Debt. Interest-bearing debt is approximately $33 billion, a level the company is comfortable with as it supports investments in future growth, supply chain, and R&D. Full-year guidance. The company is reiterating its full-year guidance for total revenue and core EPS to increase by high single-digit and low double-digit percentages, respectively, at constant exchange rates. Q4 considerations. The fourth quarter of 2024 saw over $800 million in sales-based milestones. 2025 Q4 does not anticipate significant milestone revenue, which will affect year-over-year growth comparisons. China revenues in Q4 may be impacted by VBP-associated stock compensation costs and hospital budget capping. A sequential step-up in R&D and SG&A expenses is also expected in Q4 versus Q3. Key financial metrics and forecasts. Summary. Revenue. 9 months YTD 2025 total revenue plus 11%. Core EPS. 9 months YTD 2025 plus 15%, CR. Core gross margin, 9 months YTD 2025 83%. Expected slight decrease for full year 2025 versus 2024. R&D expenses, 9 months YTD 2025 plus 16%. Expected to land at the upper end of the low 20s% of revenue for the full year. Core operating margin, 9 months YTD 2025 33.3%. On track for 2026 mid-30s target. Full year 2025 guidance. Total revenue. High single-digit percentage increase CR. Core EPS. Low double-digit percentage increase CR. Significant risk factors Medicare Part D reform. Ongoing impact on gross margins. Loss of exclusivity, LOE Brilinta, and Soliris biosimilars continuing to affect revenue and margins. Generic competition. Earlier than expected generic competition for Farxiga in the UK. China market dynamics. VBP-associated costs and hospital budget capping impacting Q4 revenues. Emerging market variability. Tender order variability in emerging markets. U.S. government agreement. While providing clarity, the company cannot provide absolute guarantees regarding future government actions. Clinical trial outcomes. Future success of pipeline assets is dependent on positive trial results. Regulatory approvals. Timeliness and success of regulatory submissions and approvals. Competitive landscape. Evolving competition in key therapeutic areas. Highlights of the quarter: strong revenue and EPS growth, demonstrating continued business momentum. Accelerated pipeline delivery. Numerous regulatory approvals and positive Phase 3 trial readouts. Key positive Phase 3 data. Significant advancements for Enhertu, Datroway, Baxdrostat, and Saphnelo. U.S. market agreement. Providing greater certainty around pricing. Manufacturing expansion. Groundbreaking of a new Virginia facility. NYSE listing. Enhancing access to global capital markets. Oncology growth. Strong performance across Tagrisso, Calquence, Lynparza, Truqap, Imfinzi, Imjudo, and Enhertu. Biopharmaceuticals expansion. Growth in Fasenra, Tezspire, Breztri, and Saphnelo. Rare disease resilience. Continued growth in Ultomiris, Strensiq, and Koselugo. Lowlights of the quarter: gross margin pressure. Expected slight decrease for the full year due to several factors, including Medicare Part D reform. And LOEs. Q4 2025 growth comparison. Year-over-year growth rates in Q4 will be impacted by the absence of significant milestone revenues seen in Q4 2024. China Q4 revenue impact. Anticipated challenges due to VBP and hospital budget capping. Brilinta LOE. Continued revenue decline for Brilinta. CEO's most important statements. Pascal Soriot. I'm pleased to report that our strong growth momentum and pipeline delivery have continued through the first 9 months of 2025, emphasizing sustained performance. We are in a unique catalyst-rich period, one that I'm excited to say looks set to continue well beyond 2026. Highlighting future growth drivers. The U.S. remains our largest market and is projected to account for around 50% of our total revenue by 2030. We announced a landmark agreement with the U.S. government which provides greater clarity around pricing and a 3-year exemption from tariffs, addressing key market dynamics and regulatory clarity. AstraZeneca ordinary shares will be listed on the New York Stock Exchange from February next year. This new listing structure will offer flexibility to access the broadest available pool of capital, signaling strategic financial moves. CFO's most important statements are Nasserin. Our core gross margin in the first 9 months was 83%. We continue to anticipate a slight decrease in the core gross margin for the full year versus 2024, providing transparency on margin pressures. We have continued to make progress towards our 2026 margin goal and remain on track, as you can see from our 9-month results, with core operating margin at 33.3%, reaffirming commitment to profitability targets. Today, we are reiterating our full-year guidance with total revenue and core EPS anticipated to increase by high single-digit and low double-digit %, respectively, at constant exchange rates. Confirming company outlook. I would like to remind you that in the fourth quarter of 2024, we booked more than $800 million in sales-based milestones under collaboration revenue. This year, we do not anticipate any significant milestone revenue in the fourth quarter, which will affect the year-over-year growth rate comparisons for the fourth quarter. Managing expectations for Q4 growth comparison. This concludes our summary of AstraZeneca's 2025 Q3 earnings call.